Canada's only weekly video mortgage news podcast, Canadian Mortgage Weekly. And today we're going to be talking about the interest rate announcement from yesterday and what's the growing sentiment about what's been happening with that interest rate announcement, how it's going to affect you, and what you can do about it to minimize the impact. So again, it's Joe Bladek, really pumped. It's episode 120 today, and very excited actually to be able to bring to you some news about the mortgage rates, because with mortgage rates going up and up and up, I'm getting a lot of concerned clients calling me, wanting to know if they need to lock in, for how long, or should they stay variable. And with all that, it's quite concerning, because with all the growing sentiment out there, with what news outlets are saying and everything, it can get a little bit confusing listening to what's out there, and it's hard to know exactly who to listen to and what's happening out there. So again, it's episode 120, and let's talk about that interest rate announcement. So yesterday we did see rates go up. It was a 25 basis point increase, and with that, it was a little bit less than what some people expected. A lot of news articles were saying it could be a 50 point basis increase, but most were saying 25, and that was my prediction as well. I did release a small video a few weeks before predicting a 25 basis point increase. But what's going to happen now? What are the impacts of the increased interest rates in Canada? How is that going to affect you? And what will that mean for anyone looking for a home today? So I have that. There's 5 things that rising interest rates are really going to impact, especially with the way they've risen lately. One of those, as a Canadian homeowner, is increased mortgage payments. If you have a mortgage right now on a variable rate where the rate changes due to prime rate changing, and your payments also change with that, your payments will go up, and they've been going up quite considerably. It's almost as if every Bank of Canada meeting in 2022, we saw our payments go up every time the Bank of Canada met. And what's going to happen is you'll receive a letter from your lender just indicating what that new payment is. And what that happens is that puts a strain on the typical Canadian's budget. I've seen some mortgage payments double since last year from the variable rate increases. If you find yourself in that situation, then you don't necessarily need to sell your home or get into a panic, because there are some folks right now that are contacting me looking to increase their amortization period from wherever they are at, say 20 years or 15 years. And we can actually increase your amortization up to a maximum of 40 years right now. And that's really helping some Canadians keep their home during this time. And, you might think, is that something that is right for me to increase amortization to 40 years when my whole plan is to pay off my home in 20 years? Well, think of it this way. If mortgage rates are high, especially this high for 1 or 2 years, could taking a longer amortization for a 2-year period be beneficial to you? And then after the 2-year period has passed, redoing your mortgage again back to the normal amortization at the lower rates. That's something a lot of my clients are considering. And when I showed them this illustration, it really does make sense for them. It really allows them also to have that cash flow every month that is sometimes very important for the typical Canadian. The second thing that I'm seeing as a result of rising mortgage interest rates would be that folks are having a lot of difficulty qualifying for a mortgage with these higher interest rates. I'm seeing folks that have a good credit, sometimes no debt. It's 2 people on the application, for example, a husband and a wife looking to apply and buy a home. So and they have great credit, good jobs, no debt, have a down payment, 5% down payment, maybe 10% down payment, the amount of home that they can qualify for is not very much compared to what is out there in the market. And folks that are trying to get into the market, we have a lot of folks that are ready to buy but just can't, and they have difficulty applying for a mortgage. If you find yourself in that situation, sometimes it's better to speak to a mortgage broker, simply because if you're applying with your one bank, they have their rules and they need you to fit in their box. Sometimes a different lender, or in this case through a broker, you have many lenders to choose from, can set you up with a lender that may count the incomes just slightly differently to benefit you, and maybe we could get you an additional 10, 20, 50,000 added to your mortgage approval simply by using a mortgage broker. The third thing that I'm seeing folks in Canada having a difficult time with these rising mortgage interest rates are reduced purchasing power. Not only, number two, are we having a difficulty qualifying for a mortgage, but reduced purchasing power. So if you do qualify for a mortgage, perhaps you want to buy a home for $800,000, but right now you can only afford $500,000. So sometimes selling and buying doesn't make sense, because you might actually end up in a lower quality home or smaller home than you were in before you sold. So something to really consider. Number four is something that I'm also seeing, and that's difficulty in refinancing or even selling your home in Canada because interest rates have significantly risen. With refinancing, what I'm seeing is that the folks that are used to refinancing maybe once every 4 or 5 years, maybe they have a car they want to pay off or a line of credit, what they're seeing is that they get to that point where they're ready to do the refinance and they just don't qualify for it. The bank's actually not able to proceed because rates are higher and the income's just not there, or for whatever reason, the refinance doesn't qualify. So those folks now have that mortgage and they can't refinance and consolidate their debt or take out any equity. And that's kind of proving to be quite challenging for a lot of homeowners right now. And even selling your home sometimes doesn't make sense right now, because some houses are sitting on the home, from what I hear from real estate agents in this market, for 100, 200, some 300 days. And the way you're able to see that is if you go into a listing, a lot of times they'll say it was just listed or it's only been up 20, 30 days, but the real estate agents keep renewing this listing. They take it off and they put it back on. They take it off and put it back on. So the number of days the listing is actually on the market is quite long, 100, 200, 300 days. And those houses are just not selling. I have a client actually that called me earlier this week, and they were in a situation where they're trying to sell, but they can't. And now they're looking to refinance, but they can't. So they're stuck in a situation where I wouldn't want to be in, but we're working through that. And if you find yourself in that situation, definitely give me a shout. There are some options we can consider. Perhaps that will work for you. And number five, the fifth thing that I'm seeing as an impact is a reduced investment returns on savings, as rising interest rates can make these less attractive. So not really a mortgage related thing, but more so on the savings side. Curious to see how rising interest rates have affected your home budget, and if they've altered your plans to sell or buy in the coming months, especially in 2023. I know a lot of real estate organizations in Canada are very variable on their predictions in Canada, but some have mentioned that house prices will continue to go down in 2023, and some are saying that rates will go back down also at the end of 2023 or beginning of 2024. We'll love to see rates actually go down. It would really help out Canadians right now. So if If you're looking to work with any of those issues, I can help you with that. If you look to book an appointment with me, I have an appointment link in the video description below where you can actually book a time directly with me to chat with me about your mortgage. And I do that all over Ontario. So with the Bank of Canada raising their rate 25 basis points last month, that's actually a smaller increase than in December. And we've been seeing smaller increases since the summer. We had a 100 basis point increase there last year in the summer of 2022. That was quite a large increase that we saw, almost like a catch up. And as we know, Bank of Canada has been trying to deal with inflation. Inflation has been cooling slightly, but it's still very high. So let's get into some of the presentation slides I have here today. Episode 120. Let's take a look at the current average mortgage payment today. So on a purchase illustration, for example, we are seeing that with a $25,000 down payment and a $475,000 mortgage, your monthly payments are $26.79 and that's based on today's rates, January 26th, at 25-year amortization over a 5-year fixed rate of 4.69. Now, if you're looking to refinance, here's a typical scenario that I see when folks refinance. Say their home is worth $900,000. They have that $180,000 in equity still remaining after they increase their mortgage to a $720,000 mortgage. That new mortgage can obviously go off and pay off your existing mortgage and any debts you may have. Maybe you're taking some equity out to do some renovations, but take a look at this. The monthly payment's $39.50 and 70 cents, and this is over a 30-year amortization period with a five-year fixed rate of 5.24. Rates are a little different on the refinance side than the purchase side in this case, and if you're looking to do either one, please do reach out to me for some more guidance. Looking at the 5-year bond yield, as of today, is sitting at 2.928% as of this morning. And what I'm seeing here is actually a steady decline from the top in October of 2022 when the bond yield did peak. We've been seeing a steady decline here. The trend line is pointing down for the first time in a few months, which is great to see because 5-year fixed rates have been going down as a result. And that's great to hear because with rates the way they are at right now, we really need lower interest rates for some of the clients out there. And because of that, we've actually seen the way the bond yield's been heading, lenders lowering their rates just slightly here and there. So if you're looking at getting a pre-approval, right now is actually a great time to do that because it's lower than it would have been in October or before that of 2022. So always good to get a lower interest rate. It'll be interesting to see if this trend line continues or if this is the bottom and it will bounce back up. If it is the bottom, then this is an even better time to get a pre-approval. What do you guys think? Will fixed rates continue to drop while variable rates continue to rise? I'm interested to hear in the comments below what your thoughts are on that. All right, let's take a look at Canadian inflation. Canadian inflation, as we know, has been very high and difficult to manage. I know that eggs in Canada are the gold standard, and we're seeing down payments now in hard-boiled eggs. No, I'm just kidding. We're not seeing that just yet, but we are seeing an inflation rate peak in June of 2022 of 8.1%, and currently inflation is sitting at 6.3%. It is a lower inflation rate, however, still high and much higher than the 2% that the Bank of Canada is aiming for. And we know that the Bank of Canada has said that they are waiting for inflation to come back down to 2% for them to stop raising interest rates. We'll have to see how the next interest rate announcement goes because, as we know, they've just increased rates again, but by a lower amount. Okay, let's continue on here for the United States inflation rate. It's also peaked at June of 2022 at 9.1% here. And now we're sitting at a US inflation rate as of December at 6.5%. Again, do we think inflation in the United States is going to continue to go down? I'm not sure. But the next graph is actually quite interesting. And I'm not sure if any of you follow these figures here, but I like to follow the CDOR rate. And in Canada, it's the CDOR rate, specifically the variance to the prime rate. So as we know, the prime rate is now 6.7%. What a crazy prime rate. But the CDOR rate was steadily increasing in March, a little bit more accelerated in April, very high acceleration in July. I guess that was the huge increase in inflation that we did see. Another bump here in late October, but we are seeing a tapering off, and compared to last week, actually the CDOR rate has gone down, and this is a very small decrease, but it has gone down. So I'm interested to see, is this a sign of things to come? Because this is typically something I use to measure if variable rates are an economically viable option and a competitive option for my clients. And in the last little while, fixed rates have been pretty competitive, especially right now. We're seeing fixed rates lower than variable rates. As you know, prime rate 6.7, and you can get a 5-year fixed for under 5%. So how long will this continue? The premium of the prime rate. We're seeing a decrease here. We'll have to follow this on Canadian Mortgage Weekly to see if the decrease continues into next week. All right. And prime rate, as we know, we've seen some aggressive increases this year from the Bank of Canada. Here on this valley, we see this was COVID, when the prime rate did drop to historically low levels. That did stimulate the economy quite significantly. And we've seen the prime rate increase ever so aggressively since then. And as you see, that's a very aggressive increase. We haven't seen this type of aggressive increase here. It's actually over the top compared to the 2008 increase. We are looking at it here. This is quite the similar increase to the increases in rates that we saw in the late 80s. So between 1986 and 1990. But something to really look at here is that when rates did go up quite aggressively, we did see that the rates didn't stay high for very long. Once they hit their peak, they did come down very sharply and very quickly. What do you guys think about the current aggressive increases? Do we think that we will see a cooling off and a sharp decreasing in rates following? I mean, if you have a variable rate mortgage, you'd be in quite a good situation if the rates did go back down that aggressively, because we would see payments come back down for variable rate mortgages. What are your thoughts here? I guess we'll don't have a crystal ball. However, a lot of economists are saying that we should see tapering of rate increases towards the end of 2023, and we'll have to watch inflation. The next inflation numbers will be out in the middle of February, so looking forward to seeing those. Okay, so we had our rate announcement yesterday on January 25th at 10 a.m. We did see a 25 basis point increase. The next rate announcement is on March 8th, 2023. I'll be at 10 a.m. on a Wednesday. Join me here for a live pre-rate show discussing the news leading up to the March 8 rate announcement, as well as the live rate announcement right here on Canadian Mortgage Weekly. This Canadian current overnight rate was at 4.25%, and it did go up now to 4.5%. The last increase in December was a 50 basis point increase, as illustrated here. And yesterday's increase was 25 basis points, so half the increase we saw in December. So comparing December's increase here, or announcement, to yesterday's announcement shows that the Bank of Canada has taken a less aggressive approach this month than they did last month. So we'll have to see what happens going forward. Is this less aggressive approach going to work to cool inflation to the numbers that the Bank of Canada requires? We'll have to see. Let me know yourself if you feel differently or want to chime in the comments below. All right, looking at the national average house price. Now, a lot of my clients that were on the sidelines in 2021 and early 2022, when house prices were peaking, thought that, you know what, we're going to wait for house prices to decrease to get into the market. Well, where are you? House prices have decreased and now stabilized since August. In August, we saw a 0.44% increase. In September, we saw a 0.65 increase. In October, we saw a 1% increase. In November, we saw a 2% decrease. And in December, we saw a 1% decrease. So very small changes now in housing prices. They're not moving quite a lot either way. They're sticking around that $600,000 to $650,000 range for the average national home price. So if you've been waiting for house prices to drop, they have. And if you're waiting to get into the market, it's here. Now, a lot of the excuses I'm hearing from the folks that did wait for the house prices to drop they're thinking that house prices will continue to drop further. That's the first excuse. And the second excuse is that they're saying that interest rates are too high. Well, I got a reality check for a lot of you out there. That is that when you take a mortgage and buy a home, the purchase price you pay on the home is permanent. That is the purchase price. And the rate that you get on your home is not permanent. That is either a 6-month, 1 year, 2 year, 3 year, 4 year, 5 year, 7 year, or 10-year term. So if you're thinking that rates are going to go back down in the future, maybe 2 or 3 years from now, you can buy a house now for cheaper and then wait for rates to subside and then be in a very good position going forward once rates do normalize, and you'll have that home at a much lower price than in 2021 or early 2022. And you know what's going to happen when rates do go back down? House prices will continue to accelerate. So unless you have a crystal ball and will time that moment absolutely perfectly, when rates are back down and house prices are still at that point, then I'm sorry to say you might be in a similar situation that you were in 2021. What do you think? Am I off base by saying that? I don't really think so. If you're the person that has been waiting for the house prices to drop, this could be your opportunity. Obviously, talk to a real estate agent in your market to make sure that they can help guide you through this process. And if you're looking for a real estate agent, please connect with me. I have connections with real estate agents all across Ontario in each and every local market and can help you get set up with someone experienced. Okay, so thank you for watching episode 120 for Canadian Mortgage Weekly. I really enjoy doing these episodes, and it's quite spectacular to see that I've been doing this now for 120 episodes. Excited to be able to share with you this information, and if you have any other questions, please reach out to me. My contact information is just below here. We'll love to be able to talk to you about your mortgage. If you're in Ontario, we can set up an appointment virtually to speak about your mortgage over Zoom, or we can meet in person if you live in Orillia or Barrie or all of Simcoe County. Again, this is Joe Bladek for another episode of Canadian Mortgage Weekly, and we'll see you next week on Thursday